Can we get a second run at those cyclicals going into New Year? Andrew, can we?
I think so. I think we're seeing the mirror image of this spring, which was, everyone thought rates were going to 2%. The economy was strong and the bond market rolled over, cyclicals rolled over, energy prices rolled over. And now and then the economic data this summer validated that. And now we're seeing weak economic data, but rates are starting to go up. Yield curve is starting to re-steepen. The semis are breaking out to the upside. So I think the financial markets are telling the reverse of this spring, which is re-acceleration in the fourth quarter. So the answer to your question is yes.
Help me out here. I've seen more collective gloom, Andrew, in the last 6, 7, 8 days than I've seen in ages. Give me the measure on the Slimmon wall of worry right now. Where's the needle this morning?
Well, I am watching the bond market, and I still say, last time I was on your show, I'll be wrong if rates go back to 1%, but I'm noticing, despite this economic data, yields are slowly creeping higher. They're north of 130, and energy prices slowly creeping higher.
Yep.
So that tells me that my fourth quarter thesis is not wrong, but I will be wrong if this all rolls over. So that's what I'm worried about.
Andrew, could we actually get any economic signal from bond markets that are so distorted, or distorted is perhaps the fair word, influenced by central bank buying, not only in the United States, but also overseas?
No question. Look, I think the bond, where rates are, stocks actually should be higher, in my opinion, on a valuation basis. But I think the stock market gets the gig that the Fed's been buying bonds and rates are artificially low. So I think actually the market is pricing in higher rates than this. And just to be clear, if rates go up, I'm not so sure it's great for the cap-weighted S&P, which benefits from this low-rate environment, given the fact that it's full of, these long-dated growth stocks.
So, Andrew, I hear you. You think we can get another run at these cyclicals. You think Treasury yields are starting to inflect higher. We might have seen the bottom. That's what you're suggesting this morning. Many people think, though, Andrew, that we need a catalyst similar to the one we got in early November last year when we got that efficacy data for the vaccines. Do you think we need that kind of catalyst going into year-end to get that second run?
Well, I think that you're going to see the economic data reaccelerate off the third quarter. That's kind of the view of analysts. I think that you're going to get a very good earnings season. I don't see any companies pre-announced. And, you were talking about supply constraints, but, I just was at an industrial conference and heard a lot of industrial companies say their backlogs are very strong into next year, and they're very confident about their earnings outlook. So I think, stronger economic data, stronger retail sales, maybe the COVID variant comes down a bit, and you've got the makings of a good fourth quarter.
That Q4 step up, Andrew, is such a good point.